What's going on, traders? I'm Jordan, Day Trading Dad. Thanks for tuning in this video. Today, I wanted to do a quick video on a discussion our pod had the other day about what is a trend and what tools they might use to identify the trend. Now, if you don't know what a pod is, I'll link it up here or down in the description. It was the very first video I ever did, and it's just a trading group that we formed to help accelerate our learning curve. So stick around right after this and we'll dive right into it. So before we move on, I think we need to at least have the simple understanding of what a trend is. In the simplest form, a trend is just the direction price is moving, and it is showing you a clear insight of who is in control at the time. Right. So if the buyers and bulls are pushing price higher, you're going to see a higher high and higher lows being formed. Downtrend, bears in control, you're going to see a series of lower lows and lower highs being formed. And if we're in a consolidation market or a range bound area, that's just going to see them fighting it out, and it's just going to be a choppy mess. Right. So those are the three forms of trends. Right. So we have uptrend, downtrend, and consolidation, chop trend. All right, before we move on, I want to go over just some quick examples of some of the most common ways that you see people utilize some tools to help see the trend. And if you're experiencing all this and you don't need it, you could just skip ahead on this part. But I felt like I needed to put this in here to just show some common examples for some traders out there. The most common is going to be using a trend line. Trend line is more of a art than it is science, but I usually just like to have like a 3-point touch and or kind of just use it from there. But again, you can see we just added a line, and it kind of just gives you more of a visual idea of what price is doing and whenever price deviates from it. The next common one, if you don't like to draw lines and play with all that, you could just use a moving average. And if you see that, if you don't like to mess with this is kind of a way of drawing your own line and seeing price, who's in control during that time. This is a 50 SMA. You could use, 100, 200, whatever your preference is. And all these tools can be used on any time frame. This is just the daily time frame on the S&P 500 futures. Next one is probably my preference is just price action and seeing a series of higher highs and higher lows in a trend, or if you're in a downtrend, series of lower lows and lower highs. But just a visual cue. It keeps the chart clean if you didn't have these other things up here, and you can just see the trend with your eyes. Kind of in my eyes, they're a little bit more clean, but again, all these are just preference and tools. The last one is probably the most common one, or not most common, but it's become more popular. Brian Shanahan's probably been a big advocate for this for a number of years, but using an anchored Vwap from like a series of low and using that as your visual cue. So anytime you'd make a big pivot low or something like that, you'd just add one to that. So, you put one here, and it kind of just keeps you visually seeing where that trend is going as well. Now, all these are just tools to show you or aid you in seeing a trend and keeping you in it as long as possible. It's not going to be an actionable type thing. So if price breaks below this line, I'm just going to automatically sell. You can see it does come somewhat of a resistance if people are maybe eyeing that as well, or if price just becomes uncertain. But prices, an auction, and buyers could have just cooled out over here, and sellers, and then you can see them kind of like, just fighting it out, and it becomes more unclear. But you can see kind of we move into off of that trend and something's deviated. So it kind of gives you a cue as well that something is changing over here. So if you were in that trend earlier, if you got it on the, a good spot, kind of like an intraday, you could scale out and take some risk off and, maybe find it whenever the trend comes back into play. All right, we're going to go over how I see price action and trends on the intraday format. And again, there is no right or wrong way how to observe and see trends. It's all personal preference. Is what kind of this whole video is everybody has their own way and has their own niche. And I just want to share with you my way and kind of guess my niche. Full transparency, I did learn this from a future trader who was with SMB Capital, Merritt Black, and I think he has then moved on and started his own prop firm. But everything we do, we learn, and we try to take something from each learning area and kind of make it our own. And this is what I've done as well. Now, before moving into this, I'll go over the chart settings and maybe I'll just put it up up in here somewhere as I talk through these videos. And then I'll go into, whenever we go into the examples, I'll just show you those examples as well. But in the intraday format, you're going to see different variations of trends, right? So just beyond an uptrend and a downtrend, we then can define it as different observations. So in this example, we see a downtrend forming, but we can then attach it and define it a little bit more and break it down a little bit more. So in this example, this is a 2 standard deviation trend where price moves below VWAP and will fluctuate in between 2 channels. Okay. And how, as we progress into this, think about how we can, with these definitions and these defined trends, how we can try to stay in these trends longer. So this is why we want to attach maybe a little bit of these criterias to these trends, because trends are the ones that are going to make our days, to be honest. They only occur 30% of the time in the market, in the S&P. And when we have these type of days, we want to stay in these as long as possible. So that's a 2 standard deviation trend, and we can look on it on the main chart. I put up the chart settings here. See the Heikin-Ashi, the 3000 volume, and then you see the multipliers at 1, which is this blue shaded area, 1.5, which is this one, and then the 2. Now this is the full session, meaning whenever the market closes and then reopens, the chart begins whenever the reopen occurs. So this occurs, on August 22nd, and then we move into August 23rd, and then closes at the pit session, which is at 4 or 5 o'clock, I believe. All right, so you can see here in this example, this is August 23rd. Price, test higher in that second deviation, comes down and test again in the second deviation, and then we have the market open here. And I believe around 10 o'clock is when a news event occurred, and then you can see price kind of just move up into that second and fluctuate in between the second and 1.5 standard deviation, right? So if we can just, if we have an entry signal or if we have a setup that gets us in it, how can we stay into the trend? What violates that trend? Well, we never get below the VWAP. We never really have an extended amount of time underneath 1.5 standard deviation here. All right, so we're moving to a 1 channel standard deviation trend. This trend could be downtrend, it could be uptrend. In this example that we're using, it's a downtrend. And this is going to be the more aggressive of the channel trends, right? So price will go below or above VWAP, maybe retest it, maybe not, and then just reject and stay inside of a 1 channel move. And most times than not, it's going to be above or below that 1 standard deviation and never break back into VWAP. But again, you can't really put those hard rules on price. Price doesn't give a shit about what we think it should do. It's totally random at times, and it's going to do what it wants. We can use the example here from the following day. So on August 24th, we can see price in the overnight session test the high extreme, test the high extreme low, rejects here at VWAP, and then as we get close to the open, it has a opening drive lower into this 1 channel. Now you can see what price does. It says, screw you guys. I'm going to go up and test that VWAP. And then if you were here on the entry of the open, you can re-enter possibly whatever your setups allow you to do. And then you can look for order flow confirmation to get you back in if your bias agrees with it. As you can see, price gets to VWAP and then we reject over at VWAP and then get back inside to that one channel. Now, again, this is just, we have an uptrend, we have a downtrend, we have consolidations. This is just a way of defining what type of trend it is for the day. And, if you should be staying in it longer, where you should be looking to scale out, et cetera, et cetera. These are just visual cues for us to maybe advance our entries and how we can stay in them a little bit longer. Now we'll move on to the most common of the type of market days that we're going to have. Trend days only occur around 30% of the time. Again, that's past performance, is not indicative of future results. But most times than not, we're going to have a tight or a wide ranging market. And I'll be honest, on these tight days, this is normally when I don't have good days. And to be honest, it's okay because I am trying to maximize on the days of the previous 2 days, trying to maximize my R returns on those days and then just limiting my losses on days like this. These days right here do provide some opportunity. I'm only looking in these 2 markets, counter trend type trades. So as before, what we saw with trending markets up or down, you're not trying to fade that. You're trying to go with it. In these type of days, this is when we're looking to do the opposite and fade back to the mean reversion. Now, let's look at an example here. I believe the following day, after we had that up move, down move, then we move into a wide ranging type day. And how you can define the wide range would be as we're testing these high extremes of highs and lows, and VWAP really is not being respected here. You can tell that they're not really hesitating. We are moving through it compared to the previous days pretty easy. And what you can do to formulate some strategies, how you would attack these type of days, or at least how I do it, is I'll use the initial bounce. Initial bounce is just the first hour of trading. So that forms that first hour of trading range. So at 10:30, this would be the area here. So this would be the lowest point from the open of 9:30. And this would be the high of that IB range. Now, with that, you can use tools like option tools to try to figure out the expected range for the market this day based on the options. And that's personally what I use, just to give me an idea how much more room price has to go and at what a good spot might be for me to consider to counter it. That might be for another discussion or another video, but that just gives you maybe an idea on how you can use tactics for mean reversion. Not just, oh, we're down here below this this standard deviation, I'm going to just start randomly buying. No, you got to have a little bit more than just, using lines like I said previously. But this is just context, the visual context on how you can look at the market and how you can put parameters on what type of day it is just using these type of tools with the VWAP. Let's see if we can find, okay, so this would be the following day, then would be a tight range day. And you can see price is really not respecting. It does test it here and reject and then move through it. But you can see we're just moving through it up and down, right? And you can see that we're just testing that 1.5 standard deviation, moving back, testing. And that's all price is. We're in an auction and we're just trying to find where the balance is. And somewhere in this middle here is where most buyers and sellers are going to come to an agreement. And when we go through an extreme on the highs, sellers are like, no, that's too high, or there's no buyers that are wanting to push that. So I hope these visual aids kind of just give you context. I know I'm kind of just blurting out a lot. I'm trying not to keep these videos too long because I know our attention spans aren't long enough sometimes with our day-to-day lives. But if you find any value in this, hit that like, hit that subscribe, comment below if you got any questions, or, if you found this interesting, or if you think it's teetotal trash. Either way, just let me know. Um, as we progress in our pod, I want to keep you guys updated with kind of what we're doing and what we're using and things like that. So if you're out there trading alone, I want you guys to feel like you're part of this group and you're kind of learning as we learn through our group as well. So in the meantime, happy trading. See you guys on the next video.